Good morning, traders and investors. I'm Joel L. Connon, along with my host, Dennis Degg, and we got a full news desk here today. We got Brent Slava, Jake LeCure, Chubbs, special guest Fernando helping out on the desk, and last but not least, Mighty Joe Young. Joe, tell him about the show today.
I was wondering if you were going to include Fernando on that or not. He's very excited to be here today. But, Joel, the day has finally come. The day has come. Are you ready for
I'm
this?
psyched. I went to bed at midnight and got up at 5 a.m.
I couldn't sleep at all. So if you hear me snoring during the show, it'll just be before our special guests are on today. It's Thursday, so that means Fari Hamzei of at Hamzei Analytics will be on talking about, well, it's Fari Tales, so he'll be giving us the stock picks to pay for that expensive Chicago soup. We'll also get a review from the special gift that Joel sent over to him yesterday at his office. And Doug Kass is on the show today. Woo! Everyone get excited for that. He'll be answering questions live at 9 a.m. Eastern Time.
Okay, that sounds great. Dennis, you in the trade cave there?
I am here looking at a 4 point trading range here overnight. It has been no action at all. We've had some good earnings report. We've had a little bit of merger rumors, so we've had lots of individual stock action, but the S&P futures not responding at all. I'm imagining they're going to be slow here today ahead of tomorrow morning's jobs numbers.
That's right. We do have that. I'll just alert our traders. Wednesday's high, 80 and a quarter. The 6 day and the all-time closing high in the SPOOs is 1882.50. Just on the downside, that number, that 1865 number held up again, Dennis. They got to 1866 and a quarter before they rallied it. So still $12 away from that, but I'm not even going to get slightly bearish until we take out that level.
You got gold getting killed
Oh.
here this morning again, I guess. Fed talk yesterday. This market is just not nervous here. As we approach new highs, gold is now approaching new monthly lows here. 12.80. We're trading down another $14 here this morning. It is just ugly for the gold bugs.
Gold's acting like gold. Market goes up, gold goes down most of the time, except when we had one weird rally we had. Open lower, continued lower, trading a buck off the low of the day. I mean, I don't see anything between the current low, 1279.20, and then the recent low on April 24th at 68.40. Could very well stop in between there, but that's the next support, according to my analysis.
And you were talking about crude here. Interesting enough, crude keeps caving, but ExxonMobil and Chevron do not. Chevron actually did raise their dividend late their last night, so that might help the stock a little bit here today. And we've got ExxonMobil reporting here this morning. I don't think it has reported here yet. Brent's going to break those numbers as soon as they come in. But crude is trading down 80 cents here right now, just under 99 bucks.
Got a little rally off the low yesterday, 99.35, and you had a 99.74 close. And if you took a shot on the short side right off the open, opened 6 cents from its high. Now we're trading down at 98.80 through our April 7th low. Man, I don't see any great support in crude until you get down to the lower 98s. That would probably be where Johnny Spangler is going to cover his short. But yeah, you could see those lows, right? I mean, it had some above 98, some below 98. So I'll go with the whole number theory on that one, 98 even. But Dennis, I just wanted to ask you, well, ExxonMobil trading up 77 cents here in the pre-market. So you got
And you're
Jo-
hearing a beep.
there it
You're
Joel,
hearing a
is, a
beep.
beat.
the results
There it
are
is.
out. Q1 EPS
Woo!
210. Analysts were looking for $1.88, so it looks like a pretty nice beat on the bottom line there.
ExxonMobil, that's new. Is that new all-time highs there, Joel? I believe it is.
Yeah, it
New
is.
all-time highs again for ExxonMobil. 103.99 it just ticked to. Keep in mind those whole numbers here. What do you think, Joel?
I think that you wish you were on that instead of ConocoPhillips. But
ConocoPhillips has been okay too here. It's
yeah,
trying to hold up.
boy, that's a.
But
All I can say, that's a big move for ExxonMobil. I mean,
yeah,
a buck 60 move. I mean, you think about how much stock it takes to move that in the regular session. So sit tight here. Wait for that high. See where we're at 9:29 and 59 seconds. What that level is, and then earmark that as a potential resistance point.
Well, you got to keep in mind the stock was very strong going into the report. Even yesterday was closing up. It ran up basically $1.50 in the last 2 hours ahead of this report. So obviously, a few people excited or didn't want to be short in the report and possibly excited to get long going into the report. So you wonder how much is priced in, but that's a pretty nice beat. 210 versus 188. Interesting that trades right to 103.99. We know the big hole numbers do come into play on the stocks, especially when they haven't been there before, because you get those institutions that are just throwing out GTC orders. They ever get up there, we'll sell them. I don't really see anything that high in the book, but I'd imagine there's something probably in the 104 area, which could hold it down. 103.69 we just ticked down to. So we'll let this digest, let this simmer, and maybe
Okay.
come back and check where it's trading in an hour or so. Also reporting there this morning, ConocoPhillips. That report was pretty decent here as well. They reported $1.81 versus $1.56, and that stock was trying to break out to new highs here this morning. It actually was a little bit just a few minutes ago, got up to 75.49, trading 74.67 right now. Full disclosure, I'm just got a little trading position long in this one. I got stuck in this one there. I was trading it last night and stuck a little bit long with it.
Okay, yeah, it did. Just in the pre-market, it just got right up to the all-time high as we were prepping for the show. There hit 75.49 in the pre-market. Couple hundred shares though. Nothing, no big trading there. That eclipses the former all-time high at 75.34. So if you run back up to that area again, could be some sellers. I mean, you think about it here. Just going on the half number theory here, 75 and a half. Someone stepped out at 75.49. So we'll see if it gets back up to that area.
I actually just wanted to mention briefly here. So sometimes I'm trading after hours, sometimes I'm trading late, sometimes I get stuck in some stocks that I don't want to be stuck in. I get stuck holding them past the 8 o'clock close last night and in through the earnings report. And once they hold through the earnings report, once I'm in there, my trading strategies entirely change because if that information is coming out, I never sit my orders out there because I don't want to get picked off. And these are trades, not an investment. So I am looking to get out of my ConocoPhillips here overnight. So it's not like a long-term trade or anything. This was a day trade that I kind of got stuck in, an after-hours day trade that I got stuck in. But I just want to mention there's a whole different set of strategies. If you're trading these things and you get stuck holding something through an earnings report, two things you want to remember: you never want to just sit your orders out there ahead of the actual report, because if the report is good, you could end up getting picked off and the stock could go a lot higher. If the report's bad, it's going to go down and just kill you. So basically, you're kind of almost in a lose-lose because you're capping your win too early, and you could obviously be on the wrong side of it and lose. It's kind of like a coin flip, but if you're always cutting your winner there and not getting out of your loser, that can lead you into a lot of trouble because it's obviously that coin flip thing. You want to have that big winner to offset the potential big loser that you're going to have as well.
Well, the chart looks good. I mean, it's breaking out new all-time highs here. Once again, not a ton of volume trading. I would still use that 75.50 level as important resistance.
Yeah, and if you look in mine and keep in mind, ExxonMobil just blew the numbers away. It's trading up about $1. ConocoPhillips blew the number away. It's trading up about 75 cents. So it's kind of priced right here, and I'm kind of getting a little bit itchy, and I might even dump it while I'm doing the pre-market show here in the 75 area if it gets back up into where it was just trading at the 75.49. I feel like that's kind of like the fair value, and they've had an hour to digest this report right now. So once you know it's digested, then it's okay. But I never like to sit my limit order out there because I don't want to hold the price down, because sometimes there's no bids or no offers at all. And if you're throwing out a limit order, up 50 cents, you're actually putting pressure on the stock. And if you're long the thing, you want it to go higher. By putting your sell order out there, you're not helping your cause. So if you are putting orders out there, make sure you put them hidden or use different strategies there. But I suggest just not using limit orders there as much as you can until at least it's had time to digest the report, which it kind of has now.
Another Bob Bright saying, limit orders, limit profits.
That's a good saying there. And you know
Yeah.
what? There's a lot of truth to that, too. We like using limit orders. We obviously don't like using market orders, but you got to be careful. There's a time and a place for all different types of orders. And holding earnings through the report and sitting your limits order out there, you're kind of like a sitting duck.
I'm just a little before you go to the next earnings things. I'm just a little surprised that the S&Ps are not reacting to this. When you had that Apple news, which was a much bigger move, people scrambled for cover, bought the Nasdaq, bought the S&Ps gave us a little boost, but S&Ps didn't even flinch when that stock was trading another 70, 80 cents higher. So I don't know. I mean, it maybe what price wasn't factored into the stock, but maybe it has been factored into the index.
The S&P futures haven't really moved overnight at all. Last night we had rumors breaking that Sprint is
Ooh.
going to plan. Bloomberg was reporting that they are planning a T-Mobile bid, so TMUS. Both of those stocks took off higher there last night. S&P futures don't respond to that at all. Sprint's actually trading up 70 cents right now. Went out at 8.50, is trading 9.18 right now. And T-Mobile, TMUS, which has been rumored for a while to be a target, is trading up $2 here. So if you were buying T-Mobile, you're pretty happy here this morning because it's trading up at 31.67 on these Bloomberg rumors.
Wow, that's what a move there for both the stocks. I'll just quickly 923 has been the or 925. I take that back. 925 pre-market high. That stock is breaking out. Hasn't been up in this area for quite a long time, but on the dailies, I mean, if you are looking for like a super extra major resistance level, you can look at the where are all those highs at? 950, just like looks like a brick wall here. The only thing I'm a little skeptical about this stock trades a lot of volume here, and to move it,
Yeah.
move it 70, 80 cents intraday, you got to trade millions of shares. It is trading pretty good volume. It's traded 670,000 shares, but boy, oh boy, I'd be more apt to sell it at 930, 940, 950 than I would to initiate a long. And then T-Mobile, I mean, everyone's been talking about taking that over, haven't they? I mean,
Long time.
yeah.
Yeah, it's been rumored for a long time. Or rumored late last year when it had the big run up from 36 to like $34 there. So this has been rumored for a while to be a target. And this is still rumors, right? Though, Brent, they didn't announce anything specific, did they?
Still rumors.
Yeah, still rumors. So you got but stock trade up over $2 on rumors. Obviously, there's serious rumors here, but let's keep that in mind there too. These rumors have been here before and they haven't materialized. So
3250, Dennis. 3250 is the pre-market high. That's the highest level for the issue. Well, coincides very nicely with the April 7th high of 3249. So we'll keep an eye on that level. But Dennis, we were going to talk about your Lorillard trade, and that was on rumors too, right?
yeah, I talked about some of my bad trades. This was actually one of my good ones here. I put this stock on. It had the rumors that this was actually in early March, late February, early March. There was the rumor that Reynolds was kicking around there. Reynolds America, RAI, was interested in possibly buying LO, and they were saying the price would probably be over $60 a share. LO quickly ran from $49 all the way up to 57 in 2 days, or 56.85. You can see that high from back on, what's that date there, Joel? From March the 4th.
Yep.
March the 4th, and then it pulled back, and I watched it for a few days, and then I ended up buying some stock for a swing trade and kind of like a rumors trade at 52 and a half. And I'm like, I'm doing the risk reward there. It came from 49, so I'm looking at it. Well, there's possibly 3.5 points downside, but then if it's over the $60 deal, I'm seeing 7, 8, possibly 9 points upside there. So I'm almost looking at a 3-to-1 risk reward ratio on that. Plus, just for waiting, I was getting a paid dividend too, because LO had like a 4.7% dividend yield. So I'm like, it's a defensive play. It's possibly in play. I'm like, I like that position. I bought it there thinking, if it ever cut out below 48, maybe I'd get out. That was my 48, 49 was kind of my out. So I was like risking $2.50, sitting on a dividend. I actually got paid one dividend while I was waiting for the last month and a half here. Stock went down to 50.84 and made a few lows there, but my stop was quite a bit lower than that. And it's been drifting higher through March, drifting higher through April, and then the last few days it just started taking off. And I do believe it's rumors again. I think wasn't Jakey saying that Faber was saying something about it on CNBC that Reynolds might be kicking around here again on the stock? I think he said that the other day. So obviously,
that sounds familiar.
yeah, so obviously you're going 54 to almost 60 yesterday. So I took some off the table finally yesterday, 59.41. I sold half of my position, and if it gets up over 60, I might sell the other half here too. But there's a situation where just buying on rumors worked out here. But I didn't buy it the day of the rumors. I waited till I had the healthy pullback. and then I added to my position. I mean, in the TMUS, you could have did the same thing really here. You'd been waiting a long time, but it had pulled back almost from the area to where it broke out there at the $28 area just 3 days ago, and now you'd already be up 3.5 points in the position.
Yeah, that was a classic Harlan move there, buying it on the pullback. You know, you had the move up, you're patient, you pulled back, you found the support here. So, I mean, the way these mergers and things have been flying. I mean, you're taking a flyer, you had a risk reward ratio, you bought it on the pullback, and you see what's going on with some of these other stocks that are rumored to be in play. So, good one. It makes you forget a little bit about your Apple straddle.
Oh, that apple straddle. Yeah.
You
We'll
had
just
to
not even
remind him,
talk
huh,
about that
Joel?
today.
When you go into like a grocery store or something and you see like a thing of apples, do you feel like pulling one out of the bottom and like having them all come crashing down?
Only when I go to Whole Foods.
Oh, okay. Okay.
Couple other ones here. The other rumor this morning here, we're doing the merger and merger rumors here this morning. DirecTV rumored to be possibly bought by AT&T. So here's Dow Jones reporting that AT&T has approached DirecTV regarding a potential acquisition. You've got DirecTV absolutely flying on this morning, breaking out, I believe, to new all-time highs here as well for DTV. 82.80 is where it's trading at right now. AT&T actually trading down a little bit on this, but DirecTV trading up significantly.
84.80 is a high point. Didn't trade much volume now. Now coming back to settle in at the 82.60, 82.80 area. Breaking out once again. Former all-time high here was 80.77. So if you just kind of want to wait for a pullback, if you're shorting this thing, the former all-time high was 80.77. And boy, AT&T. Boy, I mean, there's been a lot of rumors on that stock
All
lately.
over the place with
Yeah.
rumors.
Not sure what to make of that. Got hit a little bit in the pre-market. With this thick stock here, I kind of like to use the daily charts because really when the liquidity comes in at 9:30, it's really a better indication. You know, nice move up after getting whacked. I'd like to see a follow through this 35.74 level. I don't see any real number at 36, but there's always some size kicking around in a big stock like that at a whole number.
Oh yeah, 36. It's even thickening up in the 35.90s. I see all kinds of size throughout the 35.90s, but we're pulling back significantly here today. It's probably going to chop around pretty good though with these rumors, so you never know. Obviously, we've been in this situation where it seems like both the acquirer and the acquiree pop, but in this case, it's not happening. Where AT&T, and it's obviously still rumors here too, is pulling back 30 cents here because they're probably going to have to pay a hefty premium if they do buy DirecTV. Dish also having a sympathy move here. Obviously, Dish Network is up actually. Wow, it's really having a sympathy move. It's up $3.64 here now. I think that's a little bit overdone. Just ticked to 60.50. Was trading actively around 59. So I think, 58, 59 is pretty fair. Over 60 seems to be ridiculous to me because obviously it's still rumors here and this is just a sympathy play, but it's getting a nice lift here in the pre-market.
Right, did get a spike up just as we were on the show here. 60.50, a couple thousand shares have traded. Boy, that 60 was a little bit above 60 was a big level for quite a long time here.
Mm.
You had what, one, two, three, four highs in a row between 60.16 and 60.36. This just split that, called 60 and a quarter your major resistance.
A lot of other earnings reports here to dive into, and let's dive into a few of them right now. You know what's interesting is Weight Watchers, WTW, because last quarter they had that disaster quarter when the stock went from 35 to 23 bucks. They missed by a landslide, and the stock just got absolutely murdered. And I think nobody wanted to hold it through this report because it was actually closing down. It was weak yesterday. They're ahead of their earnings report last night. Sold off actually in the last 20 minutes of the day, sold off from like 21 and a half all the way down to almost 1950. Did bounce a little bit right at the close to close at 1980, but then they come out, the Weight Watchers number, and they blow it away here. 38 cents versus estimates of only 9 cents, and the revenue 409 million versus 399 million. Raise guidance. They do everything right this quarter, and the stock actually popping up $2.50, up a cool over 10% here this morning. So Weight Watchers destroys their investors last quarter and now rewards their investors this quarter.
Yeah, I've been looking. I've liked this stock since 40. I haven't made any kind of investment in it. Boy, it gave you a lot of time there, but to buy between 18 and 22. Just got a pop up. Oh, this is the pre-market high, 23.75. We've come back to this $22 level, and I like to see this kind of trading pattern here in the pre-market. Someone is making a stand here at 22 on the bid side here. We've snuck below it a few times. I'd say as long as 22 holds, I think this thing is good to go. Breaks below 22, boy, you got a long ways to go to fill the gap. No, not that far. 2060 from yesterday. Interesting, the stock hit 22 even on April 10th, so that's where you're breaking out from. Now it's pre support in the pre-market, and this is just kind of side news related. But when the stock got hit last time, a lot of the worries were about the Nike, like, what do they call those things? Sensiband or something? That watch that helps you lose
Fuel
weight?
band.
Fuel
I think
band?
Jake's got the one that's called the Fitbit, but
Oh, yeah.
it's not a Nike one. But
Okay.
yeah, that's what you can call them.
Yep, and Nike discontinued those, and that was something that was supposed to cause some competition. And then when I was doing the research on it, and this stock I've been following for a while, they are coming out. It may be ARNA. If you want to take a pharma flyer, they have a drug stock, a diet pill. I was actually talking to Lisa about this, and it's supposed to be an appetite suppression pill. They're marketing it. I don't know if it's had worldwide appeal, but this is one where, yeah, I don't know if it gets approved somewhere else or something. You might want to look at this. I mean, if you buy it here, the most you can lose is what, $6.40.
Yeah, that's true. I'm just looking at that chart on that ARNA. It's had a hell of a lot of consolidation here. Look at the last 5, 6, or it's like just looking over here for the last, I don't know, month and a half. Every time it gets down below the $6 area, it seems to bounce out of there. So a lot of consolidation. They must be waiting on some type of drug news there, and usually those things break one way or another once they have the news. So moving on to a few other earnings reports, Joel. Big one last night. Yelp, YELP, reported earnings, and actually they beat it up a little bit right off the initial report, but then they started buying it and buying it and buying it, and man, it's up $5 here now. They lost 4 cents. They're supposed to lose 6 cents. 76 million versus 75 million. So the earnings kind of be on the top, kind of be on the bottom. Nothing great, but everybody loves it because RBC upgrading it, Piper Jaffray upgrading it, Macquarie upgrading it. They must have had some other good metrics in that report there because wow, that stock is flying this morning.
Yeah, nice move. Pre-market high, 64.70. We peeled back from that level a little bit. Kind of a scary looking chart here. The stock has really come down. You had a high at 65.65. That was a high on April 24th. Probably have a few nervous shorts here, but also you got a scenario when the stock has come down. I mean, basically, it's got almost cut in half, right? It was over 100 and went down to
Yeah.
52.40. So there's a lot of people, sitting on a lot of stock that they're not too happy about. So if you're trading this one, keep an eye on half and whole numbers and any kind of sizable offers. Just the way this has come down, I don't think this would be even trading up $4.50. I don't know if I'd just be a great short candidate.
Kind of in the middle of nowhere here. We had the big run down. Like 70 looks like the brick wall to me, but that's 7 points higher, so
Yeah.
that doesn't come into play. So I feel like, obviously support was in the last couple of days down in the 54, 55. Now 70 is way up there. You're kind of in the middle here, stuck in the middle. So maybe short-term trades, but from a swing trading perspective, I just don't see much here. Gets up to 70, and I think there's all kinds of sellers up there. But man, that's 6.5 points away, and I just don't think that's going to come into play anytime soon.
I know we're not big trend line people here, but you can draw a nice trend line. I don't know how
Yeah,
it
that's
looks on your
true.
chart, so it could be breaking out of that. So that's another thing to keep an eye on.
MasterCard reported earnings actually pretty good after the Visa numbers were not that great. MasterCard reporting really good numbers here. 73 cents versus 72 cents, 2.18 billion versus 2.14 billion. So beat on the top, beat on the bottom, and the stock is trading up in the pre-market about 85 cents here right now. Bid at 74 and a quarter. Best offers up to 74.40. Somebody's doing a little bit of a roadblock up there because it looks like an iceberg order not moving at 74.40. Bigger seller at 74.50. So it is thickening up a little bit there. If you look at the chart, resistance
75.
is Yeah, it's very well defined. Just under $75. All those tops is 74.80, 74.82, 74.72. So 30 cents higher than here. I see resistance all over the place.
Also, if you even go back a little bit farther there, you had some multiple highs right around the 75.40 area. So a couple good areas of resistance in Mastercard.
Like Harlan says, bring up the chart. Whatever area, whatever number jumps out at you in the first second is a major number. And that's 75. I bring up MasterCard on looking at the last 4 months, and that's the number that jumps out to me. And that's the number I will be keeping my eye on here today. Maybe this is one of those pops to fade
Real
that we've been talking
quickly,
about.
ExxonMobil pulling back $1 from that 103.99 high.
Yeah.
So if you had your offer out there, good for you ahead of the 104 potential seller.
Also reporting earnings here. We got a few other ones. MetLife reported there last night, MET, and that stock was trading down a hell of a lot after hours. $1.37 versus $1.40 and 17.1 billion versus 17.6 billion. So that's a miss on the top and that's a miss on the bottom. And that put MetLife in the doghouse there last night. It traded down. Joel, how low did this thing get? It was almost down the lower 50s.
Yeah, 50-40 hit actually 50-37, and I would not. The volume on that bracket, that 15-minute bracket, was 500,000 shares. Holy mackerel! That
Maybe it
is.
was a big cross.
Was there a
or
cross
something,
somewhere?
'cause
Yeah, that.
maybe.
I mean, because what does this thing, trade per day?
So I traded 300 shares this morning. I think it must have been a big cross in there. But I was looking, and it was trading a little bit active there. Like they were beating it up. So that's interesting that it bounced right at that old low there. If you go back on the chart just 4 days ago, we were at 50.17. So that's interesting that it bounces right ahead of that old low.
Right.
Obviously, if this thing starts coming back up towards anywhere towards the 52 area, there's sellers all over the place up there, and the report wasn't that great. So I don't know. It's trading at 51 right now, and I probably feel like that's where it probably belongs.
51.43 would fill the gap from yesterday's low.
We've also got a news conference from Ford, just moving away from the earnings for a little bit because there's like 150 companies or 200 companies that report here this morning, so we won't get to them all. But news conference for Ford, they're getting their new CEO, Mark Fields, is going to be announced at 9 a.m. as the new CEO. Stock just trading slightly down here in the pre-market, down about 9 cents on that report that's coming up.
Kind of recovered from the earnings. They whacked it. That was the gap down on earnings. Hit the 1571 level. I remember it was trading a lot there in the pre-market. Had another low on April 9th at 1575. Now you're moving up. Potential double top 1615, 1618. Keep an eye on that level. Settled right up there. But we did talk about before earnings, the major size at the 1650 area. Hit 1644. Just did another. This was a couple weeks ago. Did an article on Ford and their transition with the F-150, and they're spending a lot of money. Changing plans and everything. A lot of expenses. Just the information I came up with was it's going to kick in another year or two. Earnings might not be great this year, but really the synergies from the new F-150 supposed to be a lot lighter, a lot sleeker. So they're looking 2014. This might waffle 2015. The analysts are looking for the big moving forward.
Hey, and if you guys are talking automakers right now, we did get Chrysler numbers out a little bit earlier. They said April U.S. auto sales were up 14%, so look for retail figures out of both GM, Ford, and also Toyota, Honda. All the guys are going to be reporting monthly numbers today.
Okay.
Toyota's trading up already. Did they report already there, Brent? Because it's trading up here $1.50 in the pre-market at 110.
I don't believe so. No, I don't see anything.
What's the symbol on that?
TM.
TM. Oh, that's an easy one.
It's an ADR though, so obviously it trades in Japan there last night. So maybe it was trading a little bit higher in Japan, and that obviously will come into our markets here as well. So that might be the reason that it's trading higher here in the pre-market. Here's an interesting report. Brent, if you're still kicking around, maybe you can dive into the Avon Products report because the stock, it looks like it's a disaster. The stock is anyways off of this report. I was trading this after hours last night. Somebody wanted out. I actually had a little long position. I was like, if he wants out, I want out. I took a small loss on it, selling my stock at 15. I think I was selling like 1509, 1510 area, and the stock is obviously now down at 1410. So pretty happy that I took the little 20-cent loss there on my stock. What's the report look like, Avon
So they
Products?
reported 12 cents versus 21 cents, and sales also missed at 2.18 billion. Analysts were looking for 2.2 billion.
This is a mess. This is
Wow.
breaking out to new lows here, Joel.
Didn't someone want to buy them at like 21, 22, or something like that?
They
Like
should have sold themselves.
yeah, it was. I think it was an overseas company or something. I can't think of it. That was a while ago. I think that was like 2, 3 years ago. Lisa does get one product from Avon, and it's like $7.98, and the lady comes like 4 times a year. So, based on same house sales, I guess the numbers aren't that good. Uh, I don't know. Disaster here. Just looking at the stock trading in the pre-market, hitting $14. We haven't traded this low since late 2012. 1370 and 1377 were a couple monthly lows. So if you're so inclined to take a shot here on the downside, 1370 and 1377 potential support points.
Hey,
Yeah,
look,
looking at all those lows in October. So you do have a lot of lows. You do have a lot of support. So the stock is coming into support. But the one concern here is, if you're buying support, make sure you have a stop out here because this is a pretty bad report. And if you look last time they reported, just going to the charts, it reported, gap down, paused for a couple days, and then continued to drift down here. So this could be one of those scenarios. If you are picking bottoms, don't let this trade become an investment. This thing starts cutting down through 1350. I always say when the stocks are making new lows, you got to go. And this is now breaking down to new monthly lows. We're retesting the lows that we had back in 2012 here. So there is some support in here. So I don't know if I would necessarily be shorting the stock in here, but if it starts to take out that 1370 area that you were talking about, Joel, maybe there is a potential for a short in here as well. This one's just not looking good on the charts.
S&Ps are slipping here a little bit, Dennis, as ExxonMobil pulls back here. We are now in the red by 3/4 of a point. That close is shaping up to be a good level here. 1878 was the close. We matched yesterday's high at 1880.50, 1880 1/4 here. So we're losing a little bit of altitude. But we're going to go to Fari here in a couple minutes, Dennis. And I know you have a few earnings report. Ace popped in with a couple stocks. And
hey, real quick, Joel, we did just get a couple of breaking
okay.
data points. Probably why the market is pushing lower. We got initial jobless claims for the weekend at April 26th coming in higher than expected at 344,000. Economists were looking for 320,000 reading there. And then we also got personal income and spending, 0.5 and 0.9% growth respectively there.
Isn't there a number that comes out too ahead of the unemployment number that kind of gives
You're thinking of yesterday's ADP number, I believe?
yeah, yeah, how was that?
Let me pull it up real quick. I don't remember off the top of my head.
Okay, pre-market low S&P's 76 1/4, and we are about a buck away from that.
It was a little better than expected, 220,000 versus 210,000. And just right here, right now, we're getting some Clorox results. 105. Analysts were looking for 108. So
Uh-oh.
that one might be moving a bit lower, but it looks like they're also cutting their fiscal year guidance. CLX, check
Uh-oh.
that chart, boys.
Okay, all right, boy, you guys got me in a fast market over here. I'm looking at all these charts, and here we go, Clorox. Boy, I was watching that thing when the market was selling off. Well, it hasn't really sold off much, but those couple dives that we had, that thing was just plowing higher. But now you get some bad numbers, and let's see where Clorox is trading.
It's trading down here, 88.69. Somebody just whacked it right on the report. I don't know if that's a news algo or not. They hit out 89.12, 89.50 just for like 200-300 shares. So very little volume here. Whacked all the way down to 88.69. It's already back bid at 89.11. Thick stock. They're lowering the guidance. It's obviously not good news here, but at the same time, this is a lower beta stock, higher dividend stock. I don't know if they're going to kill this thing like $3 or $4 or anything like that. Full disclosure, I got stuck with 100 shares of this one long last night, so I guess I'm going to eat a little bit of money here, but 100 shares not a huge position here for me.
You do have four lows in the 88.75 to 88.98 area, so we'll keep on that. Just real quick before we go to a break, Mac here. Did you see some news on that? That thing had a huge pop here.
Popping in.
Yeah, it's a pharmaceutical company, so must have had a good trial.
There you go.
Ace was looking at this thing as a short, and we looked at it, got up to 890, it pulled back a buck and a half from there. Wow, this thing had a major resistance, and wow, this thing was up over. Wow, there is no resistance in here, is there? Let's see. Yep, you did have a high at 940. You didn't quite get there, so things a little bit overdone, but good short there, Ace. All right, Joe, you gonna bring Fari in, or should we take a break?
I'm going to bring him in right now.
Hey, Ford did just announce, they did just confirm that Alan Mulally will be retiring. They confirmed Mark Fields as replacement there. Just wanted to shoot that one to
So
you
it
guys.
is confirmed. Okay.
Yep.
Good morning, Fari Hamzei.
Hey, Fari, it's Joel and Dennis. How you doing this morning?
Hi, Joel. Hi, Dennis. Joel, thank you for that excellent lobster bisque. Thank you very much, sir.
And it's funny, Fari, because I called around a couple of delivery places, and
Yep.
so I called this place, and as soon as I said the address, they knew it. They said that's Fari's place. Do you order expensive soup from there all the
Wait,
time?
Dennis, what did you put in this coffee today? Tell me, talk about it. Let's talk about that. I mean, come on.
No, they said Fari. They know it. They said you were a real big tipper too. That you were a really nice guy and a big tipper. But hey, that lobster bisque from Shaw's Crab House is incredible, and I know you like expensive soup, and I owed up, and you took a lot of abuse on
We
Twitter.
appreciate that, sir. We appreciate
Okay.
that.
So-
let me put it this way. All sins are forgiven.
Okay, so what about
That's
Twitter?
a declaration. All sins are forgiven.
What about Twitter now, Fari? What are you thinking?
Oh, I want to talk about that. First of all, I want to say something else. You guys got to realize my background. I'm a sentiment guy, right? Put call ratio, so on. What's the biggest sentiment out there that collects and it's real time? Remember, I want dollar rated. I want it to be real time. I don't want to read about it tomorrow in somebody's newsletter. I want to know now. The best thing I ever invented is Twitter. Now, how do we use that? I'm not going to make any names. That's not fair because they may change their behavior. Okay, and we had it in our chat room. When the sample size is big enough, you can do that. And Twitter can't get any bigger, right? It's out there. So, what we look for is too much excessive comments or excessive good or bad. Too much optimism or too much pessimism. And we rank a number of people so that we go through at Twitter. You can have any kind of a handle, right? That's probably what the problem is with them versus Facebook. You can have multiple. We have like six. Officially, we have 6 or 7 accounts. I think 5 of them are for the products. Each product gets those are locked. The other 2 are one is for my AT&T analytics, which is what I communicate with most people, and then there's a Hunter Killer Sub, which is our charting package. Twitter feed, which does market timing, especially on Saturdays, and then maybe Monday or Tuesday, kind of sets the tone what we're expecting based on what we saw and projected, and then how reality comes in Monday, Tuesday. Okay, but you can have all kinds of handles. All they need, I think, the uniqueness they want is email. Well, how hard is it to have more than one email? At Hamzei Analytics, I personally run around 15 emails I have, by department and so on and so forth. So you can go in and take a look. If you rank them, there's a series of people who are consistently right, and there are a series who are consistently wrong. As a matter of fact, one of that group, I'm not going to mention it to you, which belongs to which one, you have showcased this week.
Okay.
Okay.
We won't talk about
So
that.
what we look for is behavior. We don't want to change their behavior, but we look at how it is. And as people, for example, let's say get it to extreme. A good example would be, I will give you a date that comes to my mind. About 1st of February. Okay? We had massive pessimism. You see that out there, and it's just happening. And if you look at who they are, who's saying what, and how they've done in the past, okay, you see that, for example, these were the weak longs. They couldn't hold it. They couldn't hold it, so they're throwing. What are they doing? I remember I'm a Navy guy. So they're throwing baby with the bathwater through the torpedo tubes. They're shooting it out, baby with the bathwater. They're giving up. That's the time you buy. So that's
So
what I think
are you
value of
looking at
Twitter is.
buying Twitter right now? Are you looking at this level here, and are you nibbling into Twitter here, Fari?
We are actually. We put a second trade on yesterday. I mentioned on my open feed. I said that we bought July call spreads. We had June. We're not dumping them because they were. Remember, talk about options now. Remember, this is an option house sponsor, so let's talk about them with options here.
Okay.
If you buy, you don't buy. The weeklies are, first of all, the weeklies were juiced up. The only person who's going to make money is the market maker. Unless this is Google, and we know Twitter is no Google. Hello. I know Twitter, okay? Twitter is a friend of mine. I know some of the board members. I wrote to the other guys about Ali Roghani, the COO, who's Persian. I say, hey, your API is having problems. You got to fix that. They want user growth. You need to fix. How do you get user growth? Remember, API 1.1 is to use people like me who have a lot of traffic, use their servers. Well, we prepared our servers, but API is not kicking in. There are errors in there. Go and fix that. So we think they're going to. As a matter of fact, one of my engineers last night reported that they're looking at the dev forum. There'll be some changes there. They're trying to catch up. Looks like pressure is working. If you're a board member and you write to them, you call them, you talk to them, guess what happens? They start reacting. Okay? Especially somebody like me with the following that I have. Things that I do, things that I say, who I am, who I teach, is a big megaphone. They need to react. Okay? So that's beginning to happen. Now, so we bought some, we had some June calls. We lost, obviously, on it because of that was pre-earning. So we lost basically on volatility. That's what we lost, okay?
Yeah.
And we're down about 40% on them. Now, we immediately went on by June's once the price stabilized. We bought, we bought
July's.
I'm sorry, yeah, that's the July, yeah. July, I'm looking at the wrong line here. I'm saying it's July. The call spread is a little bit lower because we also want to have a spectrum in front of us of the possible targets it hits, okay? There's no question that's under pressure. There's no question they missed on user growth. But I think the main key they need to do is look at this API 1.1. Remember last year when they did that? This has been a year now. The dev forum went crazy, the development forums. People start complaining. They did not fix it. It's been dragged on. By late summer, I'd given up. Because you got to be realistic. If you're in the development environment, you understand these things. 2 or 3 months is normal in software. By end of summer, I started making calls to people I know over there. Say, hey guys, what are you doing? When are you going to get this thing fixed? Recently, I've been reported from my team that I trust says, there are being some changes. Slowly it will come back. It still is the lowest, okay, lead generator per person. Still is the lowest cost lead generator per person. Now, is it as qualified as Facebook? No, because anybody can get on Twitter. But I believe cream rises to the top. So you get out to do what you think, and if you're doing the right thing, people notice you. And then when people come in and you're asking them, hey, come into this webinar or look at this thing, obviously they're going to give you the real information, and you move on. So in terms of lead generation, you can't beat that. So I'm longer term. Actually, I'm more bullish on it now. As I told Joel, 4 or 5 weeks ago, I said, let it make a new low, then I'll be interested. True to my words, I'm doing it. Made new lows. 36.56. That was a low. Intraday yesterday morning. I'm sorry, pre-market yesterday morning.
Yes, go ahead, Dennis.
I'll just say, Fari, that I completely agree with you on the fact that this is now the most hated stock, it seems like, on the street. Everybody's coming on CNBC and they hate the stock. And
also, remember what Grosso said. I look at 2 people at the CNBC. Grosso I like, and Guy Adami. Look what Grosso said. This is the guy from the floor. He's the governor, one of the governors of NYC. He's a smart cookie, okay? You know what he said? He said it's the most shorted stock. These guys know these numbers. When the stock is that shorted, small move, it'll jump. Because you know what? You can't. It's a hard time to go and borrow and short anymore. See my point? Yeah. So this is stock is the time to own it now.
And I agree with you on the fact that I'm a contrarian at heart here too. Like obviously on the short term and day trades, I'm a lot of times a momentum trader. But when I see
Right.
sentiment and I see everybody hating the stock, I like to fade sentiment. And the sentiment for
Right.
this is very negative right
Bravo.
now. And I like the way you're
Bravo.
approaching it. I like the way you're
Sure.
approaching it with the options because obviously you limit your losses there a little bit too that way, as opposed
Yeah,
to
I'm
flat
putting
out
up. I
buying the
mean, I'm
stock.
putting up pennies. I'm
Yeah.
putting up pennies.
Yeah, I
You know,
like that
and remember
approach.
now, this is the problem. This is another lesson about option guys. Pre-earnings, because these are juiced up, we went out to June's. Okay, even June was expensive. Now they're half as expensive. So what's going to happen now? I am putting up like something like 15 cents to 18 cents for a length of a spread. Always look at what you're putting up for length of a spread. For example, if it's a 5-point spread, okay, I don't want to pay more than $1.20. Are you with me? For
We
that 5
are.
points.
Yeah, you talk
If
about.
it's
Yep.
10-point spread, I don't want to pay more than $2.
Yep.
You know why? It's expected value. It's a game theory. I give you a pair of dices. You keep on throwing. You know, one throw doesn't mean anything, but if you do 100 times, keep a stat. That's a stat. That stat tells me from people like, you know, the admiral, the guy, the fellow who ran the Merck pit, one of the largest pits, you know, pre-crash. These guys understand if you cross the 30 cents on 30 cents on a dollar of the spread, you know, of that distance, in the long as you throw more times, you're gonna go bankrupt.
I think
Okay?
what's
That's
interesting.
expected value. So you gotta have some rules.
Okay, what I think is interesting about Twitter is that the former all-time low was right at 38.80. It had bottomed there in November, 38.80 and 38.92, and then it had its run up. Now we were talking about it. I tried to get Dennis to do a bet in the pre-market. I thought the low was in. He didn't bite on that one. 36.56. I was trying to get some of that soup back, that expensive. Well, we go with Detroit. We go with Chili here in Detroit, Coney Island.
Yeah,
Chili.
I understand.
But just a final thing on Twitter here. We're going to get to the regular market here. But look where it closed. It closed right at 38.97, a little bit off the high of the day, trading up in the up and down in the pre-market. But you know, it's interesting. Right. The market has a memory, and that was the former all-time low, and it came back. And actually, if you look at it, you know, it opened to 37.66. If you were willing to take a little heat off the open, buying it 40 cents, you could have had a decent trade.
Yes, absolutely. Remember, the old support or becomes new resistance.
Exactly.
As a matter of fact, yesterday in the chat, so we talked about that because I think it was the intraday. I noticed it came to 4 cents. Joel, 4 cents of that 38.80. You and I have been talking about for a number of weeks and pulled back.
Exactly.
Intraday.
Yep.
Yeah, so it does have leverage. It is absolutely right. I agree with you guys.
Okay, so how you feeling?
Speaking of Detroit.
Yes.
Speaking of Detroit, my buddy today is going to hire a new guy. William Clay Ford Jr. is bringing a new guy that has worked for him for a while, Mark Fields, and getting Mullally out because Mullally it's time for him to retire. He did a great job at McDonnell Douglas Boeing in San Luis, came over and saved Ford during a very, very rough time. So Billy Ford is having a new CEO today. I hailed to him. We used to be drinking beer together at nights at the pub at Princeton. His favorite and mine were the same, Heineken, and he was a little bit just shy. That's all. But he's come around and he's doing a great job at Ford. I'm proud of him.
Okay, all right.
What do you think of the stock?
Yeah, what do you think of the stock here,
First of all, let me give Reg FT. Affiliate owns a bunch of it, and actually, I was doing a book, met him, and went and bought a bunch of stock. Having said that, I don't own anything. We have traded a bit in the past, I'd say, in the last 3 years, a little bit of their options. So, but I don't have any position in it right now. So let me say that we're clear there. If I go to a longer term, I assume you mean, is this for a trade or for investment?
Investment.
What's your hold horizon?
2 years.
Okay, 2 years. Good. Let me open a weekly chart. Yeah, I'm not that excited about it. Unless it goes through 18. Remember, I'm not interested to buy something cheap. I'm interested in something that would preserve my capital and grow with it. Yeah, I think it gets through 18. I'll be excited about it more. Right now, the pattern it has It's been underneath. Are you with me? 50-week bar. It has a hard time getting over it, and this has been going on since it dropped below on a retest in beginning of this year. So how many weeks we're in this year? This is fourth, 16, well, like
Fifth,
17,
yeah.
18 weeks. For the last 17, 18 weeks, it has a trouble getting over that. I'm talking about as a close, okay?
Yeah.
Weekly close. Have not seen that. Now, the next never, let's say it does that. It doesn't mean it's going to go there. It does that. Now it's above a current resistance. That resistance becomes a support if it's tested. So we need to wait for the test also. So I'm just writing all those off and saying, you know what? I'm just going to raise the bar. Talk to me after 18.
Okay.
I just don't see it yet because this could go up to 18 and fail again.
Okay.
Right? We talk about long-term
A
hold.
lot of times.
And that's a time value of money, right? But you're holding 2 years. That's a big time value of money. I'm not talking about necessarily interest rates. I understand interest rates are in the toilet. But how about dividends? Dividends are good in most of those stocks. Or your alternative, your opportunity cost.
Okay. S&Ps getting up here near
Yes,
the
sir.
highs. We have the jobs data coming out tomorrow. Kind of some
Yes,
muted
sir.
action so far. Are you playing any SPYs on the number? Or are you just going to wait and play the S&P futures when they get a bang for the buck?
I'd probably just stay with my S&P futures. I kind of trade what I know, which is the future, and they're 24/7 or 24/6. They're off on Saturdays, but I can. There's depth there, and the spread is very thin compared to SP.
Correct.
Well, the spread on SPYs are a penny. It's acceptable, but delta is different, right? You have a 50 delta on the option on the futures. I have 19-to-1 leverage
Yeah,
with
there
100
you go.
delta.
Okay.
So I'm going to wait. I'm usually also even when it comes tomorrow, at 7:30 tomorrow Chicago time, I usually wait a minute or two, or maybe at least a minute, just to see what that first head fake is. Okay. Normally on FOMC, on a non-farm, you're going to have some head fake where the institutions move it a little bit before or a little bit after, just to flush the other side against, again, the week longs or week shorts. So, but given what ADP came in, ADP showed their hand yesterday, we should be fine. We should be okay. Not a big surprise. The problem is, bigger than that, is yesterday morning, GDP. We need a new group of people down in Pennsylvania Avenue, both ends. We should fire both of them and get some new people in, because at 0.1 anemic GDP and the debt burden we have and the demographics that's coming up in the 5 to 10 years, we keep up this practice, we're done.
Okay, so
Here comes Gibraltar. Let's all move to Gibraltar.
okay, so you.
It's a tax haven and the internet is good.
All right, so we're up against all-time highs here. So I guess you're saying here you're not looking for a push up through off this number, or where you standing?
Well, as I wrote as you know, on Sunday nights for all the members, I write a little column. Kyle gets it, and Jason gets it. I think I sent it to, to Dennis, because you gave me your email.
I get it. Yeah.
I didn't have your email, Jason, Joel, but I'll include you. You'll see what I call for the week. This is for members only, and we call for with the stops and targets on SPY, and mainly it's for playing options. It basically says go and play options on these levels, and I go through a bunch of numbers that I crunch from our pages, and market timing from the timer digest is there. What's my call is over there, and what things to look forward. I do believe we're going to hit 900 this week. I'm saying 1900. 1900 this week, not 900. Hello. 1900 this week. Mainly because Auntie Jeanette, okay, and she did a good job yesterday. I don't think the numbers are going to be anything crazy. The problem really was GDP. My fear was yesterday, not tomorrow.
Okay, all right. We got
All-time high on SPX is 1897.28. The 2 sigma is 1903. That's the magnet. We should go to 1903.
Yeah, Fari, I've been talking about a scenario, and Harlan was agreeing with me. I'm wondering your thoughts on it. That a possible scenario where we go up, make new highs just by maybe a few ticks, shake out all the shorts, sucker in a few breakout longs, and then kill it on.
Yes.
Do you see that scenario as a possibility?
Sure. If it goes too fast, too good, too fast. Remember, that's 20 points from here. We closed at 1884, right? 1884 cash. SPX cash is the close last night. 1897 is all-time high. 1903 is plus 2 sigma, 2 standard deviation move from the 0 sig, all right? And it bounced off at 0 sig at 50 bar, as we said in the newsletter, okay? Everything is in play, right? But, I mean, everything is coming in like a script from central casting. So if we hit 1903, that's a 20-point. Between two, now let's say I assume today, by the way, should be very quiet. This is what we call sausage. Yesterday, sausage was so bad. One of the greatest sausage players, FT71, he had to go home at Seabot. The smell was too bad. Too much sausage. Today's going to be no different. More sausage today. So most chance of that 20 points is Friday. If that happens, that's a lot. That's 200 points on a Dow.
That's a big
Don't
move.
you think with our by the way, this is Mayday. Let me say hello to Comrade Putin, who might be listening. Don't you think with all the misadventures of Comrade Putin, that the big boys would not be long this weekend, so they will sell into it tomorrow?
Okay, all right. We've had Fari Hamzei on a Hamzei Analytics giving his take on the market. Folks, please join in the chat room and put out any questions you have for Fari to touch on some issues. Fari, a great, lively discussion. I hope you enjoyed that soup, and we're going to have to try and set something up so I can get my soup back. But thanks for coming on. Good trading to you, and we'll talk to you next week.
Thank you, sir.
Okay.
Always a pleasure.
Thanks,
Thank you, guys.
Fari Hamzei,
Yes, sir.
Hamzei
Bye-bye now.
Analytics, giving his take on Twitter, the market, Ford. Next time he's on, if you guys have any questions, man, just get in the chat room, sign up, and we'll throw them his way. So, Dennis, kind of a little bit of a melt here, trading down $1.25, nothing real alarming, 2 ticks off the low. Are they publishing any selling balances?
Yeah, you bet. And I think that's why we are melting here a little bit. You got some big selling balances here, and they're not across the board, very isolated, but very large in the stocks that they are showing. General Electric, 388,000 shares to sell. That is big. Stock is trading down 9 cents on that selling balance. That's your reason. Johnson & Johnson trading down just slightly here in the pre-market, just ticked down 40 cents. 129,000 shares to sell. That's very large for that stock. Merck, 202,000 shares to sell. That's huge for a stock like Merck. Trading down 19 cents right now. Pfizer, 324,000 to sell. That's huge too. It's trading down 8 cents right now. Interesting, AT&T, which we'd figure would have a selling balance, 216,000 to go. 152,000 in Verizon to sell. DuPont, double D, actually 179,000 to sell in that one too. And the other big one I'm seeing is Mickey D's, 94,000 shares to sell. So that's some isolated, some different sectors there, but some large selling balances for this time of day. And those stocks are showing a little bit of weakness with that information out there.
Yeah, I just want to talk about this Pfizer. We were talking about it. It was popping up on rumors
Pops
that
to fade.
to somebody, and got over 32.09 on Tuesday, failed on Wednesday, got there to 31.94. I don't know if that got up there high enough, Dennis, for you to lean on the 32 seller there, but really turned around and went negative on the day by quite a bit. If you hit that thing going through the open there, you got a nice short off. It did take out the double bottom that it had at 31.37, 31.40 here. Not doing a whole lot here in pre-market trading, but Dennis, looks like this thing wants to go back and fill the gap that it has down to 30.80.
Yeah, it was kind of a ridiculous pop, and I actually did take that opportunity to lighten up my investment in this stock. I've been invested in this thing for a long time, since the teens, and I was looking at it here, and it got up there in the 32.5 area. I knew there was resistance up there, and I'm looking, and then it's getting the dollar pop and the $1.50 pop on rumors that they might be acquiring, obviously, Allergen there, AGN, and that didn't materialize. So I'm like, you know what? I'm going to take this opportunity to lighten up my Pfizer position, and I did up there. I sold some stock at $32. Obviously, I wish I would have put a trading position on and went short, but I didn't do that. But regardless, I was happy to get out a part of my investment on that pop, and hopefully some other people took the opportunity to lighten up too, and that Pfizer pop. Pops to fade, Joel. The theme's still there.
Okay, we're going to take a quick break here, and we're going to bring on Doug Kass here of Seabreeze Partners Management. He is going to give us his take on the markets. We're looking forward to his interview. We'll take a quick break and we'll be right back with you. Welcome back, traders and investors. We have a very special guest here, Doug Kass of Seabreeze Partners Management. Doug, how you doing today?
I'm doing great, and thank you for having me.
Our pleasure. So just, getting right to the market, you got some nice press and barons there. You're talking about preparing for a bull market. And you talked about, with a bear market, that sometimes they emerge with speculative excess and other ends with bubbles. And you said this one could be ending with both. Where do you think the biggest bubbles are?
I would say that the bubbles, I would say there are 8 or 9 bubbles, or excessive valuations, depending upon your view. The most obvious bubble is in the IPO market, where more than 75% of the IPOs brought to market haven't been profitable. The second area is the social media sector, in which stocks are being valued on the notion of addressable markets, much like back in 1999 when internet stocks were priced relative to eyeballs. As an example of how the bubble has been embraced, Tesla, one of my favorite shorts, was able to sell $2 billion in converts about 2 months ago after a 4-fold increase in its share price. They paid only 50 basis points for 10-year money, and the convert demanded a 40% conversion premium. These terms are nuts. I think the third bubble is clearly the belief that the Fed's QE policy is sufficient by itself to generate a self-sustaining domestic economic recovery. If you think about it, the shoulders of responsibility of catalyzing domestic growth have been on the Federal Reserve, because our political leaders in Washington, D.C. are incompetent, inert, and partisan. Fourthly, there's a bubble in credit. When Spanish and Italian yields converge with U.S. yields, we have a strange situation. When Greece is able to sell bonds at the rate they recently did about 3 weeks ago, there's a problem. We're even seeing covenant-light loans now at a rate which is about 2 times the rate in 2007, before we had problems with those financial weapons of mass destruction derivatives. There's obviously a bubble in the amount of debt as a percentage of global GDP that is held by the major central banks. There's certainly excesses and bubbles in the Chinese banking and shadow banking industries, as well as how many trillions, hundreds of trillions of dollars of derivatives, notional outstanding exist. And finally, there's a bubble in buybacks. Goldman Sachs reports that in March of this year, it was the busiest March on record, with nearly $75 billion in buyback authorizations. For the first quarter, we saw almost 300 authorizations at a total value of nearly $200 billion. We're now on a pace of over $700 billion in authorizations for this year. That's the third most ever behind, the second most ever behind 2007, which was a market top. And we all know that corporations typically buy high and sell low. The last time we saw this rush to buy was 2007, the year the market peaked.
All
Okay.
these bubbles here, Doug. Obviously, we know bubbles get bigger. I've been in the market since 1999. I watched the tech bubble. I've watched, all these other different bubbles keep inflating and inflating here. Obviously, the social media bubble and some of these Momo stocks, the bubbles kind of burst there. But overall, the market here, we're up here at 1877. We're 15 points off the all-time high. Do you think this bubble is ready to burst, or are they just going to continue to drive this higher? Like, when are these bubbles going to burst? Because I agree with you. I just don't know when it ends.
Well, we have seen the first. We've seen what I described as the high beta earthquake, and it occurred. It began in March, early March, the first week of March, when the league-leading biotech stocks began to break down, and obviously it continued for the last 4 or 5 weeks as companies like Amazon, Google, Priceline, Tesla, Netflix, Yelp all got schmeiced in the market. So I think this is the first shot across the bow. And I think investors are coming to look. Share prices have clearly benefited from a combination of massive liquidity and zero interest rate policy, but I think investors are increasingly realizing that each progressive QE is having a more measured impact upon domestic growth. We have rates now at zero. They have been for some time. QE has obviously become a blunt tool. Think about it. We've had easing for 5 years, and we had 0.1% real GDP in the first quarter announced yesterday. Basically, the Federal Reserve has built a bridge to growth, but they can't deliver the destination on their own. And even though a Fed run by Helicopter Ben and who I call Whirlybird Janet Yellen can change how things look, they can't change what things are.
Okay, a lot of your thesis here is, based on stock evaluations. So, looking at stock evaluations, two-part question here: do you create pricing models, for your strategies and implement them that way? And then the follow-up: when the market has been at similar levels as far as stock valuations, what were the results?
Um, Let me ask the first question. What I try to do, look, forecasting prospective market levels out 12 months or more is an imprecise art form. To me, it requires probabilistic decision making using imperfect information about an inherently unknowable future. When you start going out over 12 months, it's more a function of one's philosophy than an investment prediction. But we try, especially within the next 3 to 12 months, to figure it out. And what I do is basically a scenario analysis. I have 4 basic scenarios incorporating economic growth expectations, interest rates, and valuation. The first one is economic, and I attach a probability to each one, and then I just figure out how the number comes out, and I come out with a valuation of the S&P at around 1650, which is roughly 12% below where it is. But I'm reminded of the quote that a good forecaster is not smarter than everyone else. He merely has his ignorance better organized.
Great quote.
Okay, we
So,
are.
so do you, this 1650?
The second question I forgot. I'm sorry. There was a second question.
Just when the market was at similar levels for stock valuations, what was the market's response?
Well, let me tell you. I'm not gonna answer the question directly.
Okay.
I'm gonna answer it a different way.
Okay.
To me, valuations look far too elevated for some obvious and not obvious reasons. Buffett's favorite market valuation tool is market capitalization as a percentage of GDP. It's risen in the last 5 years from approximately 70% to 140% today. Another guy, Robert Shiller at Yale, I've lectured in his class, he looks at average earnings for the S&P 500 index over 10-year periods adjusted for inflation so that 2004 can be blended with 2013. So the Shiller index ratio divides the price of the index by the earnings number. The ratio is hovering around 25 now, and that's 50% above the historical average. With regard to valuations, The fundamental problem to me is the issue of what are normalized earnings. If you look at today's valuations, it seems to me it's exactly the reverse that occurred at the generational bottom of March 2009, when a lot of people, reluctant to buy into S&P at 666, thought that the market was still expensive at around 15 times, trailing 12-month earnings of around $45 a share for the S&P. But they failed to take into account how depressed earnings were vis-a-vis a higher level of normalized earnings power. So think about it. Today, investors are doing just the opposite. Mm-hmm. They're looking at projected consensus earnings of $120 a share. But this is anything but normal earnings. They're inflated because corporate profit margins are at a near 60-year high, and they're 72% above the average over the last 6 decades. So normalized earnings are well below the $120 a share, just as normalized earnings back in 2009 were well above the deflated $45 a share. So the index may appear to be trading at only about 16.5 times nominal or stated earnings, but against reasonable margin assumptions, normalized earnings, the market's probably trading at a very rich 19 times.
Okay, we're on live with Doug Kass of Seabreeze Partners Management. Just getting his thoughts on the market. If you have any questions in the chat room, please join in.
I like the questions. I love that. I like the freestyle in it.
Okay, good.
Doug, you're talking about 9 bubbles you see there, and everything, in your opinion, seems to be overvalued. Is there any sectors that you like right now? Like, there's been this whole rotation from momentum stocks to and growth stocks into value stocks. Do you see any value in any specific sectors out there? Any like specific stocks you like or sectors you like?
There are very few sectors that meet my standards of value. There are a lot of sectors that meet my standards of overvaluation. The stocks that I like are kind of one-offs, kind of bottom-up, and not necessarily sector-related.
Did you want to give us an example of any of those stocks you liked? I know in Barron's you were mentioning this MON.
Sure. I'll give you a couple examples.
Sure.
Let's start with, I like a company called, where should we start? Let me give you some. Let me try to think of some ideas that are away from Barron's, because all I have to do is read that.
Okay, all right.
You can tell how bearish Doug Kass is. He
can't find a bearish stock. We're going to take a quick break and be back with Doug Kass.
Okay, I'll give you a stock that I didn't mention and I really like, and it's a one-off. It's a retailer based in York, Pennsylvania, with about 270 department stores, principally in the Midwest and Northeast. The company is Bon-Ton Stores. It offers brand name fashion apparel and accessories under the Bon-Ton label: Carson's, Boston Store, Bergner's, Elder Beerman, Herbinger's, and Yonkers. The stock has recently sold off, reflecting 2 conditions. Number one, the departure of the company's CEO, Brenda Hoffman. He did it for personal reasons not related to the company, and the impact of the winter weather on the company's operations. On the first thing, the CEO departed because of his desire to return to his family in New York. There was nothing untoward about the announcement, in my view. In fact, he's being considered, I believe, for a senior position at JCPenney. Second, with regard to the weather's impact, the disappointing results shouldn't come as a surprise considering the location. All the company's stores are in the northernmost part of the country. I think that Thomas Grumbacher, who is the company's chairman, is getting old. He's over 75. He owns over 1 million shares. Given his age and the recent management announcement, he might be incented to look at some exit strategies in the period ahead. I think the company is worth, it trades at around $11 or $12. It's probably worth $18 on a private market transaction. And some obvious buyers could include Lord & Taylor, which is part of the Hudson Bay operations, Dillard's, and also a couple of private entities in the Midwest.
Okay, we got a question coming out of the chat room here, and BAC had a little bit of stumble there and giant mistake. Does this foreshadow more trouble for some of the other banks farther on down the line?
I'm quite negative. I cut my teeth on the banking industry. I actually, my master's thesis at Wharton was a book I co-wrote with Ralph Nader called Citibank, which was a relatively well-received a book in the 1970s. I also was the financial service analyst about the management after I graduated at Wharton, so I know this is one of the few areas I know something about. The banking industry was on a tear. If you go back to February, for no apparent reason, a lot of price momentum, players going into the group. Bank of America was became a hedge fund hotel. Probably every major hedge fund owned a large stake in the bank. My problem with the industry is basically that the profitability is a function of several, well identified and basic variables: the activity in the capital markets, the level of the loan demand, FICC activity, which is trading in products tied to interest rates, corporate credit, mortgages, currencies, and commodities. Obviously, the trend in credit quality, interest rates, and the slope of the yield curve. All these things are going in the wrong direction, particularly the yield curve, which has flattened dramatically this year. So I think Bank of America poses a real problem. It's my largest short. If you look at the revenue and profit components of Bank of America in the first quarter, you'll see that net interest margin hit a record low at 2.29%. The net interest income was off by $1 billion relative to expectations and a little over $10 billion. The credit quality has begun to deteriorate as measured by their first quarter loan loss provision, which increased from the fourth quarter's $330 million to over $1 billion. Their FICC revenues declined. Their home origination business is evaporating. And I'm short the stock. And then, of course, we heard news of that the company had a capital deficiency, which they just uncovered 5 years later, which is horrific.
So
Probably the banking industry has become not only too big to fail, but too big to manage.
Are you concerned about any other of the big bank stocks here? The same story could happen possibly in any of
I'm
the other
also
ones?
short J.P. Morgan and Wells Fargo.
Okay, so obviously yes.
Yes.
Also, Doug, I just wanted to just flip it for a second. I follow you on Twitter there. I always enjoy your tweets, and you often tweet this line, "The market has no memory." And I love that line, and I was actually thinking about it the other day as well. And I've been calling it like the random walk theory seems to be working here all of a sudden, because this market does some funny things. It'll sell off 20 points and then ride the whole 20 points in the afternoon. Do you think
Right.
any of this has to do with that there's just so many, does it have anything to do with like the market structure, like high frequency trading or anything, that they're obviously, doing 60 or 70% of the volume and they're just momentum bots out there just pushing the stocks around and there's just
Yeah,
not
I think
liquidity?
that, with HFT accounting for nearly 70% of total trading activity, it's become kind of the tail that wags the dog, and it's a dangerous precedent. And I always write columns on Real Money Pro in the street called "Kill the Quants Before They Kill Us," and that's what we're seeing. But in a broader sense, the type of what I read, on Twitter, I get into fights with all these guys that express the self-confidence of you, and I think it's great to have a view as long as it's a rigorous view supported by fundamental reasons and analysis. But self-confidence is something that in myself, I try to stay away from, and I hate to see it from other people, because, as I said, the market sometimes it has no memory from hour to hour. Forget about day to day. And to me, the only certainty with Mr. Market is the lack of certainty. So I don't think people should be so authoritative in view and should always qualify their views with caveats and words like "will likely" or "possibly" or "might." Too few do that. But to me, there are two conditions that really concern me about the market. Number one is the volatility, and that's consistent with that we're seeing not enough apples and too many Amazons. What do I mean by that? We have entered we've been in a bifurcated market over the last 6 or 9 months, and that's changing. Bifurcated markets are very difficult to analyze, but usually develop late in a cycle as part of a topping process. The two most classic examples were in 1972 and 1973, when we had these nifty 50 one-decision growth stocks continued to be strong while the bulk of the stocks were weak. And obviously in 1999 and 2000, at the end of the internet tech stock boom. The current situation is not as extreme as those two classic secular endings, but it does, to me, fit in with a cyclical late-stage market. We've had this move recently because of the beta earthquake, out of high beta, high octane stocks into value stocks. To me, this is reminiscent of what happened in 2000, which presaged a major market decline or bear market.
Okay, Michael Lewis made a really big splash on 60 Minutes with his statement that the market is rigged. Just like to get your opinion on that. Along with that, of course, we're talking about HFT and then the IEX exchange. Is that something that you're active on?
I'm not active on IEX, but the market is rigged.
It is
the word
rigged.
The word rigged, if you go to the Webster Dictionary, basically implies that the players are playing on an uneven and non-level playing field, and that is the case. And the recent purchase by Bill Ackman, Pershing Square, of Allergen stock is another example of how the market is rigged. And what this is serving to do is to alienate and disaffect the retail investor to the game. They've been clobbered by two major drawdowns in stock prices in the last 12 years. They've seen the turn of screwflation, which I coined in Barron's in an editorial, in which their wages are stagnating while the costs and necessities of life are increasing. We have a demographic issue. We have an aging of our population. In other words, people want to become more conservative. When they see this sort of volatility, when they see this rigging, when they see a flash crash which is still unexplained, it turns them off to the markets. And what it does is, as their activity is limited, the individual investors' activity is limited, high-frequency traders become more and more a percentage of total volume.
Right.
Kill the quants before they kill us.
Okay. Wow, that's
Wow.
that's a very very powerful quote there. We got a lot of problems with our budget and our fiscal responsibilities and the deficit. I mean, how can we deal with that? And do you have any potential solutions, or where are we going?
One of the things we could do is institute, which traders hate, but you can introduce an even modest financial transactions tax, and that would evaporate each high-frequency trading because their edge would be gone.
Wouldn't that just harm if you put the financial transaction tax? That's going to hit the little guy though, Doug, is it not? Like the little guy that's trying to trade from home.
It may be better for the day traders' financial well-being to reduce their level
What
of
about like
activity
an order
too.
Cancellation tax or something instead? Would that?
Yeah, something like that. There's many permutations. That's probably a better idea.
Okay, we talk a lot about technical analysis and the charts, and is that something is something that you follow? Do you think that the old saying?
I call it voodoo.
Okay.
Charts tell us where we've been, not where we're going, guys.
Okay. All right. Yeah, that's what they say at at the bottom of the sea. There's a bunch of ships, and they all have a chart room in it, right?
That's right.
That's the thing.
Well
So
put.
okay, so definitely. I mean, you touched on you were talking about like the the deals that have gone on and things that are going on in Twitter. Ackman with this, getting involved in this deal. I mean, to me, just being a simpleton, boy. I mean, if you know someone's taking over a company and then you're in cahoots with that company and you go out and you buy that stock, I mean, where are we going to draw the line on this?
I think it's a bunch of crap that he's allowed to do it. That's all I'll say.
Okay.
To me, it's front running.
Yeah, I agree.
It's front running cubed, and I don't understand. But I don't know. The SEC has.
Seems like there's different rules for different people out there, Doug, and that's really what the little guy, I think, is
A famous
thinking now in
trader
this
on the
market.
floor once said to me, Joe Bruce, legendary trader, he said, the rich get richer and the poor go to prison.
Wow, and some of that is the truth in that too. Wow.
Okay, Doug, you talk about being in the market and shorting the market. Do you do you use the actual equities? Do you use options, futures, and do you also have just catastrophic insurance on? Doesn't sound like you're long a whole lot, but do you
I by nature, I'm a guy that sees the glass as half empty. In fact, my accounts that I manage and partnerships that I manage are long short, but they're short biased, and I would say 99.9% of the long short managers are long biased. So I'm almost always in the net short position. And I do think that in theory, what you look, I've also learned something else, that shorting isn't for everyone. Reward versus risk is asymmetric. You can only lose, you can only make 100% if you find a bankruptcy, but you can lose a multiple or an infinite amount of money if you're wrong. It requires tremendous price discipline and risk control, which many investors don't have. It involves taking a lot of small losses, so it's not for everyone.
Yeah, risk-reward ratio is something that we talk a lot. So we're on with Doug Kass here of Seabreeze Partners Management, giving his bearish thesis on the markets.
Let's
Doug,
get more questions.
we got more questions. Okay, they're coming for you here. Okay, what is your most hated sector?
I think that the entire social media sector, we're going to look back, and most of these stocks will decline by between 50 and 70%. As I said, the notion of addressable markets, the size of addressable market, has replaced eyeballs in 1999. It's a dangerous situation. I think that the beta earthquake that we've seen, the decline in all these high beta, high octane stocks since early March, is a strike across the bow and foreshadows weakness ahead.
Okay, Steve Jobs, Warren Buffett, not big fans of splitting stocks here. Apple's doing everything to make their stock go up, except create new products. How do you view that upcoming split in the stock?
It's obviously been viewed favorable by the markets. To me, it's a bit of financial engineering, and I think it's part and parcel of the fact that once a stock which was on its ass started to rally off the slightly better than expected earnings in the quarter and better guidance, coupled with an increase in the dividend payout and obviously the 7-to-1 split, it got the stock moving and it got the price momentum guys and day traders back into the stock, and that's what we're seeing. It will peter out.
Okay. I mean, everyone has a mentor and people that they've learned from in the business. I like to read different books from different people involved in the markets. Who do you look up to, and who do you think that you've learned the most from about the markets?
I would say from a trading standpoint, I have a mentor that I look up most, that people don't know him very well. He's kind of a legendary figure in Boston. I call him the chief. His name is Jerry Jordan because he's part Indian.
Okay.
And he's one of the most brilliant traders I've ever met. He has this uncanny ability to overweight and pick out very early the one sector or sectors in the market that are market leaders. It's just amazing. And I've learned to be an aggressive trader from him. From a fundamental standpoint, there is no one better in the world than Lee Cooperman and Omega Advisors, who goes belly to belly with companies, who knows often companies as well as the CFO of the very companies he manages, he invested.
You reading any good books right now?
I just wrote a book.
Okay, all
I don't
right.
really have time. I get up at I start my day at 4:15 in the morning and end at around 6:30 at night. And to be quite honest, I used to read a lot more than I do now. I have a list of favorite investment books, including The Alchemy of Finance from George Soros, obviously Graham and Dodd, Security Analysis. I think that the poker player Doyle Bronson's book Super System, a course on power poker, is tremendous book to read for the traders. Irrational Exuberance by Robert Schiller at Yale, of course, that I've lectured in. David Einhorn's Fooling Some of the People All of the Time was a great read. Anything Jim Grant writes, Minding Mr. Market, Money of the Mind, sensational. Leon Levy's book, I forget the name of it. Bernie Kornfeld wrote a book called Do You Sincerely Want to Be Rich, which examines the psychology of the investor. And finally, Jerry Goodman, a.k.a. Adam Smith, wrote a book called The Money Game in the late 60s. He just died in January, which every investor and trader should read. George Soros' Soros on Soros was a great book. Barton Pigg's Hedgehogging was a great book. I read these. I probably read each of these 10 times or more.
Oh, really? So you read them time and time again. Another side.
Yeah, but I just wrote a book called, which will be out in the fall or early winter, with John Wiley. The first of 2 books I signed on for. Doug Kass on the Market, A Life on the Street, which references my the last 15 years of contributions in writing a blog every day for The Street, Jim Cramer's The Street.
Okay, we're on with Doug Kass of Seabreeze Partners Management, sharing his views on the market, talking about bubbles in different sectors and whatnot. Boy, do you follow the marijuana sector at all?
I used to smoke a lot of marijuana when I was in college, but I don't follow the group.
You don't follow that sector then?
No, I just think it's. I think your money will go up in smoke, to reference Cheech and Chong, if you invest in this group.
Okay, all right, a little bit too speculative. Okay, and just moving on here, and we did see this is going back to Barron's as far as having things that you want, and this relates to QE and tapering in your interest rate outlook, that you like some closed-end muni bond funds. And what would change your mind to reevaluate that position?
I would say if the discounts to net asset value moves toward parity, just towards zero, they're still at around 6 or 7%. And I had a different view of interest rates. If I thought rates would go up dramatically over the near term, I would move away from that. But it is a lesson. I actually wrote an article this morning on Real Money Pro, which is part of The Street, entitled "The Tortoise and the Hare." You look at this group in mid-December. I made a case for buying the group. On average, the 14 funds I purchased are up 13% this year. And the moral of the story is sometimes, like in the Aesop's tale, the tortoise beats the hare. Sometimes ingenuity, creativity, analysis wins the big race. And sometimes we don't have to buy these high beta, high octane stocks to deliver superior returns.
Okay, this is a real general question here, because we have investors in the chat room that have very little money in the market, people that have larger amounts of money. But if you had to give one tip to investors that have anywhere from $5,000 or $10,000 in the market, going on up, let's say to $5 million or $50 million, what would be the best single piece of advice that you could give investors today?
I would say that the real money in the investment business is made by long-term investors. Patience is a virtue. Catch it if you can. Always in a woman, but never in a man. It's very important to stick tight with the thesis. If Mr. Market provides you an opportunity to buy an asset at a sharp discount, don't be swayed by negative sentiment, which has created that opportunity. Be disciplined and buy. In the long run, there's a gravitational pull. Despite my proclivity towards short selling, there's a gravitational pull towards higher prices.
Okay, so besides, I mean, you have your thesis, and a lot of times, like during the financial crisis, we didn't see it coming. Just, to end the interview here, what do you think is going to be, the catalyst or the tipping point? Is it going to be companies start lowering their earning projections? Is it going to be something that's going on in the Ukraine with Russia? I mean, what is going to be the tipping point?
I think the tipping point is going to be that it is clear that the economic recovery domestically is going to be subpar after recovery of the second quarter, and that as a consequence, earnings will be disappointing.
And what sectors do you think? I mean, so far, no one's guiding the street lower. What do you think are going to be some of the first sectors to, to fess up that lower earnings are on the horizon?
Well, I think unlike stocks, housing is subject to the real economy. Real wages are declining. Newer investors like hedge funds, private equity have lifted home prices because they bought homes to sell, to rent. Housing affordability is taking a bite out of the market. It's going to get worse. And I think housing will be the first disappointment.
Okay. All right. I just see our value investor, Tim Melvin, hopped in here, and, he's trying to
Hey,
find...
Tim writes with me on the street.
Okay. And Tim is, he's trying to find value in the markets. We have him on the show, and he's having a really hard time finding value stocks. But he does, you talked about some of the big banks. He sees some kind of the, perhaps some value in some of these smaller regional banks, perhaps them being acquired, mergers and acquisitions. What's your view? We got your take on the larger banks. How about some of the
I have
smaller?
actually one regional bank holding Tim's aware of, Northwest Bank Shares, NWBI, just paid a $1 special dividend out this week, pays 42-cent regular cash dividend, trades around $13 in basically a regional in the western part of Pennsylvania in the fracking country, and it's a play on increased fracking and possible M&A target.
Okay. All right. And so this round of earnings that we've had is still pretty rosy. So, second quarter, third quarter, you think a little bit farther on down?
I don't think the earnings are so rosy. I think about 70% of the earnings have been beaten, but I call these beats the Twit Olympics. If you ever saw Monty Python's Twit Olympics, where the contestants' event is jumping over matchbook covers. Basically, investor relations departments and corporate managers manage expectations, and those expectations are always met by a penny or less or more. And I think it's no accomplishment that 70% of the profit expectations have been increased. The fact is, the average weighted increase relative to expectations is less than 2%.
Okay. All right. Well, we've had Doug Kass on of Seabreeze Partners Management, giving us a broad perspective on the market, caution to investors. Doug, thanks so much for taking the time out this morning to come.
Thanks for having me anytime. I enjoyed it.
Thank you. We'll surely have you on again.
Thanks, guys.
All right. Doug Kass of Seabreeze Partners Management, giving his take on several different stocks, several different sectors, talking about his bearish thesis, and Just the way he talks about things and discusses it. He's so well thought out.
Articulate.
In his discussions, and I don't know. That was a
It was
great.
great.
What did you learn, Brent?
Let's see. Well, I learned a couple stocks that Doug Kass is long.
Okay. All right, and a few that he's short here. So, moving on, we kind of went a little long there, but let's just move on to the markets here. And I didn't even get through half of my questions. We had them popping in the chat. That was great.
Gotta save them for next time, Joe.
Yeah, thanks. Thank you for joining in, everyone in the chat room. Those are great questions. Moving on, S&Ps are trading lower here, 1874.25. We have made a new low from the pre-market session. I see no major support in here down to that double bottom that we had from Tuesday and Wednesday, 1865, even 1866.25. Still 10 points away from that level. See some jockeying going on, probably any kind of rallies here up near the close or up at the 1880 handle. You may have people wanting to take some positions off. I think we just got to talk about the trading activity, though, in ExxonMobil here. The thing is negative now after going to 103.99. Brent, are they having a conference call, or are they? What's going on? What are they saying here? Because it is not looking good here. Let's just take a look at the pre-market chart. Got up to 103.99, and now we're back under the 102 level. ExxonMobil, quite a reversal here. They also upped the dividend. Was that a day or two ago that they did that?
I think that was. Let me see. Bring up my little chart here. That was.
We've got a long way to go to get to yesterday's low. That was 100.71 here. Trading below. Interestingly, the close was 102.41. The pop off the open, 101.96, got up to 102.39. That's 2 cents short of the old-time closing high at 102.41, and that was the high and the close. We'll see if we come back up to that area, if it poses as resistance again.
Exxon did raise the dividend yesterday afternoon, or they announced the raising of the dividend, and it does look like they are doing a call right now. I'm not seeing any comments that would kind of account for the current action, but I will keep you up to date on this one, Joe.
Okay, let's just taking a look at early trading here. Apple, boy, got awful close to that $600 level yesterday. Just sniffed it. Now you're getting a little bit of a pullback. Doug Kass, not a big fan of the stock splits here. Let's take a look at the trading. In Apple here, yesterday we got to 599.43 and couldn't hold, close to kind of weak here. Let's just keep an eye on the whole 590 area. 89.80 was the low from yesterday's session. We've hit 90.26. We got a nice bounce off the 590 level, so if you're trying to protect some profits here from the big run up into the shares of Apple, keep an eye on that 590 level. S&P's recovering here to unchanged, recovering from the morning lows, getting a 4-point pop here. The pre-market high at 1880 and a half coincides with Wednesday's high at 1880.25. Also, just a couple stinking points above that, you have the all-time closing high in the S&P futures at 1882.50, and that is also the 6-day high in the issue.
A lot of Doug's comments, just kind of, you're like, wow, this is getting real. But a lot of his comments just really struck a chord with me. I mean, he's saying some concerning stuff, but it's like this is kind of how I feel too. So.
Yeah, but you know what? Another thing that he said, and I think this is the most important thing if you're a trader and you're an investor in this interview. Number one, he said shorting is not for everybody. Okay, and then he also says his approach to shorting is that he takes positions, okay, but he picks his parameters, and he says in shorting you take a series of small losses. Okay, so obviously I know I've been short. If you short the market, you have your parameters. But what he's banking on is whether he does it in stocks, whether he does it in futures, whether he does it in options, he has a stop. So he knows. And then what's going to happen is just, we talk about this all the time, is your risk-reward ratio. So a lot of these times when using these tight parameters, yeah, he gets stopped out. He loses a little bit of money. But you know what? When the day of reckoning comes, all those small losses are going to be they're going to be vanished by a big gain. So I think that was a really important thing that Doug mentioned, and he also mentioned shorting's not for everybody, and even if you're not shorting, that doesn't mean that you can't protect your portfolio. He says. When I asked him about catastrophic insurance, and I think he always has something in his portfolio. He's not trying to predict the event or when actual things are going to happen. He just has the positions on. He did talk. Well, he kind of stumbled there when we asked him about a stock that he liked here. I thought we were going to have to take a break.
Yeah, right.
Yeah, I really did. But he did mention BONT.
Bonton.
Yeah. That stock isn't those little chocolate ice cream things?
That's a bonbon.
Oh, that's
Definitely
a bonbon.
bonbon.
Okay. All right. Well, BONT, it's a lower risk stock here, trading at $11. That was something that he liked, and I think he also mentioned NWBI,
Northwest Bank Shares.
Yep. Kind of hopping in the Tim Melvin camp in value. So
that was really interesting because he said that it was a play on fracking. So apparently they must do a lot of financing into that sector of the energy market, I guess. That was kind of interesting to me.
Right. Okay. All right. Well, we are coming up on 9:45 here. The S&Ps are in the green, trading up $1.25 here, $1.50, approaching the pre-market high at 1880.50. Yesterday's high 1880.25. Just above that, the all-time closing high 1882.50, and as well as the all-time closing high. So I hope everyone enjoyed the interview with Doug Kass. We are gonna get that up for if you want to listen to it again. I know someone was asking about all the books that he liked, so we'll get through the interview, perhaps try and go through it and mark off different segments where he talked about different things. So thanks for the activity in the chat room. I like to see this many people in the chat room every day. This is Joel Elkanen, along with Dennis Dick, Brent Slava, Jake. We didn't get Shaky Jake on, or we didn't get Joe on today because of the extended interview. But thanks for joining in. We'll be back with you tomorrow.